The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks so much for kicking your trading day off right here. We got some PPI numbers and inflation. Seems like it's a little sticky. We got producer price index up 0.6% on the month. The number they were looking for was 0.3%. We got jobless claims. We got retail sales this morning, and the market digesting all of those numbers right now. We pair some of the gains you had in the pre-market. You were as high as 52.53. Coming into that number, you see the volatility. I'm going to put it on a 1-minute chart just to illustrate what happens at 8:30. We're at 52.50. We're off 10 points off that price level, but you still have markets in the green across the board as we have yields rising higher on the prospect of a little bit of sticky inflation. That's been the theme, and let's just jump into those numbers as we do. So, sliding up for the headline. This is from Bloomberg. U.S. producer prices jump, adding to signs of persisting inflation. Okay, the numbers you want to pay attention to here. Now, these are producer prices. Whether they actually trickle down to the consumers, okay, not always the case, but nonetheless, they contribute to all the factors that, of course, are a part of the inflation story going on. Producer prices, month over month, 0.6% versus 0.3%. That's a mammoth beat. Now, you got some volatility and variance on a monthly basis for sure. On the core basis, you exclude food and energy, 0.3% versus 0.2% was expected. Year over year, you come in at 1.6%. The market was looking for 1.2%. That's the biggest year over year number since September of last year. Probably not what you want to hear if you're the Fed. And year over year, if you exclude food and energy for the core, you're at a 2% number. The number they were looking for was 1.9%. And yeah, when you take a look at that on the chart, I'm going to blow this up. I mean, that is a persistent number, man. That is month over month on the bar chart there. When you look at the line, that is the core. Nonetheless, both of those pretty lofty numbers on a month over month basis. And with that, we also got retail sales. Now I'm jumping around articles because here's your retail sales. 0.6% for the month of February, okay? That was after a downwardly revised 1.1% slump in January. Okay, so quite a bounce back. We have a retail sales number that was a slump of 1.1% in January. We come in at a 0.6% increase in February. The market was looking for a 0.8% increase, though. Interesting. The other number you got this morning, unemployment claims, 209,000. You actually dropped from the 210,000 we had the week prior. The market was looking for 218,000. A very robust job market, to put it lightly. Producer prices a little bit hot. Retail sales come in a little bit soft. There's a lot of data to digest. And with that now, let's jump around to some of the charts. Give you a little context as we jump around. S&Ps trading up 7 points still, but you see a little bit of a drop off. We're coming into pre-market session lows. We'll put it back to a 5-minute chart. 52.39. NASDAQ 100, we're up by 30 points this morning. 18,359 right now. Dow up 106. You were as high as 39,698. Seems like 40,000 might be in the cards at some point. Only about 300, 400 points away from that price level. Less than 1% almost. It's remarkable. Russell continuing to underperform. That's the theme, right? Russell right now, negative by 5 points. How about Bitcoin? We make a new high overnight in the future, 74,415. You're back off about $1,000 off that price level. You're off by $700 on the session technically. Now, check out crude. Crude, $80.71. We just made that high in the last few minutes. We take a look at the daily on crude. You back it up to the lows that we made on December 11th, 67.71, a series of higher highs and higher lows. Crude coming at you. Now, I bring that up. Okay, we'll keep going through. The reason why you had the core number and the headline number a little bit different. The headline number getting a lot of contribution from energy. Okay, goods as well, but energy prices, gas prices, you see the chart of oil in terms of the rise that we've had. I mean, what do we got? March 1st on a daily basis, you were as high as 80, 85. We're pushing those highs right now. And that is talking about a price level, folks. $81. We have not seen $81 since November 7th. We're almost coming into April, so we're going to start dealing potentially with some higher energy prices. That could complicate the picture when you have higher energy prices contributing to what? To higher prices, to inflation across the board. Yeah, to put it lightly. We jump over to yields. The trend continuing. We have lower price and higher yield right now. You're talking about a 10-year yield of 4.24%. 4.24%. We're 6 days away from a Federal Reserve meeting next Wednesday, March 20th. We'll see what they have to say. Quite a complicated picture for the Fed. The dollar gets a little bit of strength. Higher yield, dollar strength, right? What's that going to do to the gold contract? Yeah, that's going to put some weakness into gold. Gold right now down by $14 at $21.66. And we jump over to the VIX. VIX sitting at 1355 from an elevated level Monday of 1604 in this market. Now, we back up to some of the stories we're talking about here, okay? PPI, which excludes volatile food and energy, the core, okay, advanced 0.3% up from 0.2%, okay? Now, getting down into this a bit. Yeah, stripping out food, energy, and trade services, which is even less volatile PPI, prices were up 0.4% after a 0.6% gain. And I'm going to get the energy prices in here. I'll have to pull it up after the break. Maybe it was in this one we were looking at. Yeah, here we go. So 2/3 of the rise in the headline PPI came from a 1.2% surge in goods prices. That is the biggest increase since August of 2023. As with the CPI, the acceleration was traced to energy prices, which saw a 4.4% increase in the final demand measure, gas prices jumping 6.8% at the wholesale level. Right? 2/3 of the rise in headline PPI came from a 1.2% surge in goods prices. And and that having a lot to do with energy prices. When you're talking about gas jumping almost 7%. 7%, man. I was staring at the gas. I was driving around this morning, running a few errands. And yeah, I could see those gas prices, man. Just they kind of caught my eye. Higher prices. And what do we got? We got the market pulling back. We have yields trading a little bit higher this morning. And you have dollar strength on that number as we march forward. A lot to digest this morning on the opening bell. 16 minutes away, we jump to the dollar index. We take a look at the daily. Dollar pushing about 103 right now. We were as high as almost 105 recently. And we back it up to that gold contract. A little bit of a pullback in gold. But all things considered, folks, it was quite a run in the beginning of March, right? I was talking to our man Tim Ord, who is on my dad's program this afternoon. I was talking to him, I think, a week ago when I did the program. Might have even been Tuesday. I think it was a week ago. And 21.26 we were talking about. That was one of the price levels he was talking about. You could just get a very reasonable pullback in this gold contract, folks. It's been quite a run from 2,000 to 2,200 in a matter of a few days. Gold chopping around near those highs, 21.67 right now as we got positive markets digesting a hot PPI number. And can you even see a pullback on this chart in the S&Ps, folks? S&Ps right now still in positive territory. That was not always the case. I mean, imagine the case, right? We got a hot PPI number right now, and the market's still in positive territory, and that is with yields continuing to rise. Okay, so yields are moving higher. The market's shaking it off so far. We're in positive territory. Stay tuned, folks. We got a lot to talk about. We'll be back in 3 minutes. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Attention all opening call subscribers. Next Tuesday, March 19th, Basil Chapman will be hosting a live 90-minute webinar for all subscribers. From 4 to 5:30 p.m., Basil will take subscribers through an educative journey, giving insight into how he will approach this volatile market. Basil Chapman's opening call newsletter has a 30-day money-back guarantee for all first-time subscribers, and all subscribers get access to his trove of webinar archives, so you have nothing to lose. Go to the newsletters tab of TFNN.com and sign up today. We'll see you March 19th. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This portion of the morning market kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We got the markets in positive territory. S&P's right now still up about 6 points. NASDAQ up by about 30. We'll get the Dow up 104. We jump around to some of the FANG stocks. The Magnificent Seven, we see how we're trading off this action pre-market. Amazon shares, you were as high as almost 178. We're still basically positive by a few pennies for Amazon shares right now. Trading at 176.85. We jump over to the biggest company in the world, Microsoft shares. Quite a trade yesterday, right? You drop off on the opening bell. We get it all back by the overnight session. Microsoft shares is going to be about $2.50 to the upside this morning. You jump over to Google shares, up by about $1 to 141.53. We jump over to Apple, used to be the biggest company in the world, not so much anymore. 172.16 Apple right now, barely in the positive by about $1. Excuse me, you jump over to Tesla. So Elon, SpaceX, they got a launch going on. I think it might be happening right now, right? They kept pushing it back. I think it's in Texas going on. Third launch that they're pushing for. The first 2 exploded. We'll see if that goes. Doesn't really have a ton to do with Tesla shares, but you know what does? The continued slide to negative prices on this equity. You back it up to $300 last July. Lower lows, lower highs, continuing action. You're now below 170. You started the year at 260. You think about what the market has done over that period of time. Remember when Elon was out there railing in 2022 about the Fed and how the Fed was the one causing so many problems in the market? Doesn't seem to be the case anymore, man, as the market's doing just fine. And Tesla, not so much the story. And you got to keep your eye on it, man. We're at 170. Putting things back on a daily. You know, Elon loses that case with his pay package. He's got less shares than he thought he had, to the tune of almost $55 billion. And his shares face a potential margin call that is somewhere in the ballpark of $100, man. I'm surprised more people are not talking about that story because at some point, if this trades lower, man, we know how margin calls in the market work, folks, okay? If you put your shares up as collateral and the price of those shares plummets to a certain degree where they feel that that collateralized amount is no longer a safety net, they make you put up more capital. And it's going to be quite a saga if he hits a price point that he has to put up more capital, and I'm not sure he's going to do it when he's already railed against the fact that he doesn't have enough ownership in terms of what he wants. There's a lot going on there. I don't think it would be a good thing for Tesla, though. And it's pretty remarkable that day after day we creep lower and lower and lower on those shares. Yeah. That's an interesting one, to put it lightly. Okay, where do we go from there? Let's jump around to some of the stories of the session going on. We jump to Under Armour. So, we talk about a story of woes, man. Now, let's back this up a little bit, okay? Where was it? I think somewhere maybe in here, 2019 or so. Look at this demise they had from 2016 even. You're trading at $7.30. We back it up to a 5-minute chart. There's your volatility. So Kevin Plank, he is coming back as CEO. And it is interesting that not often would you get the founder coming back to right the ship and you actually trade lower. But it seems to be the case that that's kind of an acknowledgement that things are broken right now, more so than a reprieve for this equity. You're down another 50 cents. That's quite a percentage move when you're trading at only $7.80. So Mr. Plank, he is coming back to lead that company, and he stepped aside in 2019. Now, if you recall, can't believe that's 5 years ago because I remember when it was happening. He had stepped aside. He still remained as chairman. He's got enough voting shares in there for super voting or whatever they call it, right? Yeah, he controls Under Armour through super voting shares, never left the business. I think he was chairman. Yeah, remained as executive chairman and brand chief, okay? But he's coming back to lead that company. Mohammed Al-Arian, he is going to step into the role as chairman because Plank was the chairman out there. There's your 5-year chart of what the stock looks like. I just pulled it up, right? Pretty remarkable. That stock had the highs and lows, but nonetheless, they're dealing with some problems there. And there was quite a controversy when he stepped away. He had some issues going on with the company culture. He had some personal issues with the TV anchor out there in terms of emails that were out and how that was being portrayed in terms of journalism, his company, intimate relationships with the journalist, approaching it. And then you had the 2021 settlement. That was only $9 million. This got a lot of headlines, though, that it was pulling forward orders from future quarters to meet revenue targets, basically fudging the books, okay? They didn't admit any or deny a wrongdoing, and it was only a $9 million settlement. But he had stepped down amid all of that, okay? Yeah, so nonetheless, he's back. The market's a little skittish, though, on that numbers. You're trading at 730 right now, down from 780 on Under Armour. We'll see where that one goes, right? All right, let's jump over to some other ones out there. Dollar General. There's a pop for you out with their numbers. So Dollar General is out with their numbers, and stronger than expected earnings. They earn $1.83 on almost $10 billion of revenue. Check it out. Let's pull this one over, man. Yeah, 9.86 billion versus 9.78. They project annual profit below estimates, though. But I guess on the heels of Dollar Tree, which was an absolute debacle yesterday. Yeah, there's Dollar Tree, okay, from 150 to 130. So Dollar General sidesteps the same demise that they had. Dollar Tree closing 1,000 stores out there. Dollar General, you're a little bit higher on their numbers so far this morning. You jump over to Robinhood. They've got some action. So Robinhood said Thursday that its equity trading volumes in February rose by 41% from a year ago. Now, I've said this before many times, and keep in mind the percentages on small numbers can be deceiving, okay? And we can get into those numbers, but when you start talking about percentages on small numbers, they can be deceiving, to put it lightly, okay? Where this company was a year ago, it was trading at $8, all right? They had some real problems. You are up by 41% from a year ago. But boy, they were the crypto darling, right? How far are you going to go back? No, that is the high, to $85 in August of 2021. Do you remember when they were talking about some of that, man? How much money they were making off crypto? Nonetheless, they are higher this morning, and you got Robinhood trading up $2. That's going to be what, a 12% pop almost for Robinhood shares on the open. Markets digesting a lot of numbers this morning as we continue to slide lower, though. Look at this volatility at 8:30, and since then we've had higher, lower lows and lower highs in the market. You got the S&Ps barely holding on to gains right now. We're positive by about 5 points. NASDAQ 100, we're positive by about 30. Dow positive by 80. Let's jump around to some of the banks as we come into the opening bell. JP Morgan this morning up by about, we'll call it flat to 191. You were higher to 192.64. We check in on New York Community Bank. 385 so far this morning for New York Community Bank. Bank of America shares off of the highs of yesterday. We're trading at 35.95 right now. And yeah, it's pretty interesting, Mr. Mnuchin. So he is out there trying to capitalize on troubled businesses, it seems. And now he's going after TikTok. And, you know, I can't understand what's going on with Trump and Republicans. This isn't political, man. Trump was the biggest enemy of TikTok out there. And now he's for it. Now Republicans are for it. I don't get it. Nonetheless, we'll see how it unfolds as the House passes a bill to potentially get rid of TikTok unless they divest from China. Mnuchin says, I'll step in. Stay tuned, folks. We'll be right back for the opening bell.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open, digesting PPI a little bit hot, digesting retail sales a little bit soft, and digesting initial jobless claims at 209,000, under the 210,000 we got last week, and off of the estimates of about 218,000. Nonetheless, we got markets hanging on to single-digit gains this morning at 52.38, positive by just 5 points or 0.1% in the S&Ps. NASDAQ we're positive by 30. You got the Dow hanging positive by 92. Bitcoin, giving up some of the overnight gains, still sitting at 73,000. Can't complain there, I think, if you're in Bitcoin. Crude, one of the stories of the session right now. You're pushing almost $81. You're making highs, as we covered in the beginning of the program, that we have not seen in some time. I think it's $81, right? Is that what I said? 81 bucks we haven't seen since, November 7th, man. Right? What's the recent high? $80.85. We're pushing that price level right now. Energy prices, a huge component of the goods prices that we just got in PPI. You look at this chart, folks, that'll tell you, okay? Back it up in terms of where we were on December 11th at 67.71. And just like that, by the middle of March, coming into the busy driving season in summer, we're pushing almost $81 in the price of light sweet crude right now. You jump over to gold. As yields are pushing higher, we have dollar strength. That's putting some weakness into gold. Gold right now, down about $13 at $21.67. We do check in on yields following a hot PPI number. What do you got? You got lower price and higher yield right now. The 10-year off 14 ticks at 110.16. That's correlating to a yield that is now just above 4.25%. Just above 4.25%. And again, 6 days out from the next Federal Reserve meeting, March 20th. Put it on your calendar, man. Chairman Powell, he'll be out there. We get a new dot plot as well in 6 days. Going to be interesting to see what they have to say, man, as we get tons of data that they are digesting, to put it lightly. And we jump over to the dollar index. Back above 103, you got dollar strength on the heels of higher yield and a little bit of persistent inflation. Yeah, to put it lightly. All right, jumping back to that TikTok story real quick. Money in politics, right? I think we all agree that it's a bad thing. And just for some context of what's going on here, because I don't think many people know the exact context of how this is all coming down the line in Trump's reversal, okay? Because I agree, man, China controlling TikTok, okay? That's a problem. It's a problem. The data, the tracking, the youth, all that stuff, okay? And so Trump does a 180, even as you have a pretty bipartisan effort in the House to make sure that they're divesting from Chinese ownership. Now, listen, this is going to probably go through some type of appeal challenge, even if it comes through, right? Biden is creating a TikTok account as he's saying that he will sign a bill to overturn it. Maybe that's the right play for him, as in you can't deny it when it's just a pervasive fact, especially around younger youths in terms of being out there as a politician. But he does say that he will sign a bill that bans it if it makes it through Congress. But you got to have this gentleman in your mind when you're seeing this conversation shift forward, okay? You got billionaire GOP mega donor Jeff Yaz. Is that how you pronounce it? Maybe. He's got $15 billion of his $41 billion tied up in TikTok, okay? And he is one of the biggest donors this election cycle so far. And he is one of the biggest donors to the Club for Growth, which is a big part of what's going on. So yeah, 46.4 million, okay? He's become the biggest donor in the 2024 election cycle. He's spent almost 50 million so far, okay? He's been mentioned as a possible candidate for Treasury Secretary. This would be if Trump wins in November. And what it comes down to is that you got a total reversal, as in Trump broke up with the Club for Growth, okay? It's a conservative organization. Yaz is one of the biggest backers for them, but now what comes? There's been a peace offering, okay? So Club Growth, they're back in it. Trump, he needs some money. He's back in with, now that he's the nominee, right? We had many people in that party that were trying to get somebody else than Trump. Club for Growth was one of them. That's not happening anymore. Everybody's getting in line. And you have this gentleman, the biggest donor out there for conservatives, and now Trump's cool with it. Okay, so you got to realize what's going on in terms of the context of that, because you better believe that it's a factor. Otherwise, I don't realize how the shift makes sense. He's out there saying that Facebook's an enemy of the people. He likes using that term, folks. All right, he calls Democrats enemy of the people. I'm pretty sure we all have friends that are either Republicans or Democrats, no matter what side of the aisle you're on. And I don't usually refer to them as enemy of the people, but pay attention to what's going on, man, because this gentleman's got $15 billion tied up in TikTok, and boy, he's making a hard press to make sure that he is in with whoever gets in office, especially if it's a Republican, to put it lightly. $50 million, not a lot of money when you got $15 billion tied up in TikTok. But nonetheless, that story is going to persist as the House passes that bill and we march forward. But who's stepping in, as we mentioned? Yeah, Mr. Mnuchin. He's saying, you know what, I'll come in. I'll take those. No problem. he's putting together a group to buy TikTok. Seems like he's going after those troubled assets as he comes in and helps raise, $1 billion from New York Community Bank as well. But yeah, he's putting together a group to buy TikTok and maybe provide an alternative. We'll see if that plays out. A lot going on in that story, to put it lightly. And look at this market. Pretty tame open, man, considering all the economic data we got right on the open. Market, just digest it. We're up by single digits. All the markets holding on to gains. Russell just continuing to underperform right now. And yields sitting at 4.25% on that 10-year right now. All right, we jump around to some other equities with their numbers. Dick's Sporting Goods out with their numbers, and they're crushing it, man. Check it out. So they got an earnings and revenue beat. Let's slide this one over. This company just crushes it, man. Pretty remarkable. Excuse me. They're raising their quarterly dividend by 10%. The market likes to hear that. Their fiscal fourth quarter was the largest sales quarter in its history. $3.85 earnings per share versus $3.35. Revenue, $3.88 billion versus $3.8 billion. And folks, when you talk decimal points, percentage-wise, that's a pretty big chunk when you're talking about 80 extra million on that number in terms of top line. Net income for the 3-month period, almost $300 million compared with about $236 million a year ago. Yeah, and they continue to march. We are guiding to another strong year in 2024. We plan to grow both our sales and earnings through private comps, higher merchandise margin, and productivity gains. During the quarter, same-store sales rising almost 3%, well ahead of the 0.8% lift the market was looking for. Just amazing, the comp sales these companies put together, man. And look at this thing taking off. Look at this. Let's back this up for some context here. Look at this run, man. My goodness. Dick's was just trading at 100 when that market rally began, and we're trading at 220 right now, up 17%. And you back it up even further than that. Yeah, that's what I was looking at, that first pullback. So what do? You go down in the doldrums of COVID at $16. My goodness, $13 this thing was trading at the doldrums of COVID. 13, you drive up to 150. You challenge that high as well at the beginning of 2023. And just like that, you're now up $120 from where you were in October. Whew. And, I like Dick's Sporting Goods, man. They got a Dick's Sporting Goods at one of the malls that we visit out by us in Brandon. And what I will say is pretty expensive, man, pretty expensive. And in this economy where we have inflation persisting, right, we have some of the economic stress on the pocketbook, a little bit tough. Dick's overcomes that. No problem, man. In this market, they're overcoming a hot PPI number. 6 days out from a Fed meeting. S&P's up by 9 now, 52.41. Stay tuned, folks. We'll go over some other equities with some action this morning. We'll be right back in 3 minutes. Don't go away.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of Basil's educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. I got a chart of MicroStrategy up here. They are the Bitcoin holders, right? You talk about a run, man, from 400 and change to almost 1,700 on that. And news out there, so they were higher, but they're raising $500 million to buy additional Bitcoin to use for other general purposes. The company, which develops software but serves primarily as a proxy for Bitcoin, was up 11% on Wednesday, so they're raising even more money to buy even more Bitcoin, even at $1,673. But guess what? The market, you spiked higher to almost $1,850, and just like that, you're $200 off where this thing was trading at 6 a.m. this morning. $200 where this thing was at 6 a.m. this morning, folks. I just showed you that back in October, it was only trading at 400. And meanwhile, today alone, you gave up almost 200 from where it was pre-market. That's a little bit of volatility for you, to put it lightly. And there's your Bitcoin acceleration up to about 73,000 and change. Just to give you some quick context here, folks, okay? The 382 would bring you back to 60,000 in a heartbeat. If you're not willing to take that heat, not sure you want to be playing with Bitcoin right now with the type of volatility you have. You see that one day on March 5th, right? From 70,000 to 60,000 in a heartbeat. And right now we're pushing 72,500. But Bitcoin pairing some of the recent gains as volatility persists, to put it lightly. All right, we jump around to some of the headlines this morning on the PPI being a little bit hot. This one from Bloomberg: bond yields rise as traders dial back. Fed cut bets. That's one of them, man. Now, they got the 2-year here. This is your 2-year. Now, the 2-year does not jump as much as the 10-year because it's a shorter duration, so you don't get as much volatility when you get the interest rate changes that you may expect. But 2-year yields rising 3 basis points to 4.66%. There's your volatility around that 830 number, okay? And there's almost a little bit for everybody here in terms of we get a hot PPI number, but it is interesting that you combine that with what? A weak retail sales number, which is definitely interesting. Now, jumping over to that PPI number, okay, here's the headline for that one. Producer prices jump, adding to signs of persisting inflation. And yeah, this is PPI, and this is, the bars are the headline number, okay? And the line is the core. But what I want you to pay attention to, man, these are month-over-month bars. And we just came in at 0.6%. And the market was looking for us to come in at like 0.3%, okay? And core PPI comes in at 0.3% versus 0.2. But even on the headline number, one of the biggest factors there was goods prices, okay? And when you talk about goods prices, energy prices come into that picture. And on the day that we have crude pushing, what, $81, a series of higher highs and higher lows, this might be a persistent theme pushing forward as we go forward in terms of energy prices contributing to a sticky inflation number, complicating a picture for the Federal Reserve in terms of when they potentially begin cuts. Now, on Bloomberg this morning, man, after the number, they had a gentleman on providing some analysis of the economic news this morning. And he was actually talking about the possibility of hikes again. I mean, if that ever starts getting into the realm of conversation, he was putting in at 10%, something, and I don't think that's going to happen just yet, folks. But boy, watch out for this market. If we ever get into a conversation where hikes are actually in the, not just a tail risk, that are actually in the conversation as a realistic nature in terms of coming down the line in the Fed, yeah, an interesting one nonetheless. All right, we're going to jump to the CME FedWatch tool, okay? And this is talking about the probability of where we're going in rates. Now, what I'm going to do here real quick is they allow you to jump to what meeting you want to go to, all right? So you take a look at the March meeting, okay? And I'll post a link for this in the den. And this is not the Holy Grail. This is not the Bible, folks, okay? But it is a component of where the market is pricing in what the Fed is going to do as of right now, okay? Now, we start with March. Nothing's happening in March. There's a 99% chance that they're going to stay at 5.25 to 5.5%. Not sure who is even taking the 100-to-1 odds that they cut. Not happening. That's a losing wager. You're not going to win that one out of 100 times, folks, okay? They're staying put at where they are. Now, you go out till June, because this is where it gets especially interesting, okay? In June right now, they're putting the odds at about 2-to-1, right, that there's a single cut. So you got about a 37% chance that they stay where they are right now by June, and you got about a 60% chance that by the June meeting, they have cut once, and you actually got a 4% chance, okay? Still a pretty tail risk that they cut twice. We go to July. July is about a 1 out of 5 chance right now. The market is pricing in that they stay where they are. You got about a 50% chance they have one cut by July, and you got a 31% chance they have 2 cuts by July. And we're going to finish it up with September, because I was looking at this even last night, and it is interesting how quickly the market is thinking they may do it. I don't see this happening, man. Okay, even if they start cutting by June, unless something really drastically changes in this market that has to expedite how quickly they feel they need to cut, like maybe there's, extreme weakness showing up, maybe unemployment begins to rise, they really start getting worried that the economy is too weak, that you might get a rollover with some lag, and they need to cut quickly to stimulate some of the economy. I don't see that happening, though, okay? But by September, okay, there's almost a 50-50 chance they get 2 cuts, and you're telling me there's almost a 25% chance that they get 3 cuts by September? I don't see that happening. I don't even see 23% seems magnificently too high in terms of what the market is still pricing in for cuts. Yes, very real chance you get 1 cut, maybe you get a couple, okay? But just like when they paused, right? They were hiking, they're hiking by 50 basis points, then they're hiking by 25. Then what did they do? Then they paused, they hiked, right? They gave themselves a little room. Then they paused in perpetuity to allow them, and that's where we are right now. And then what are they going to do? I imagine they're probably going to cut and then give it a break, cut and then give it a break. Maybe they go every other meeting, something like that. Again, the data is going to decide all of this, okay? But this data is pretty strong, man. Initial unemployment claims, 209,000. We're still dealing with an unemployment rate of 3.9%, up from 3.7, but 3.9%, folks, okay? Doesn't seem like right now that they are in any rush, and at the same time, we have inflation persisting. CPI, a little hot. PPI, pretty hot, 0.6% versus 0.3%, and you have energy prices complicating the picture. Now, the last part of this conversation is when you go, it's pretty cool where you take a look at, where this was prior, where it was now. Okay, let's go to the June meeting, and you go to June, how quickly things shift. 1 month ago, folks, February 14th, it tells you where these statistics are, okay? Now, it's pretty interesting that a month ago, they had a pretty similar notion of maybe we get 1 cut, okay? And a month ago, the market was pricing in about a 54% chance that we get 1 cut, which would bring us to 5 to 5.25% from where we are right now. And it was thinking maybe we even get 2 cuts with a 25% chance. Well, you see how quickly that goes out the window, okay? So keep in mind with how quickly this market is moving every 30 days. That's the thing. Stay nimble. Watch the data, okay? Things can move very quickly. We've seen that happen many times as the market's gotten ahead of itself. And look at this market. Talk about things shifting pretty dramatically. Look at that drop off, man. Right at 945. That's a sell order for you, man. S&Ps down by 0.3% right now. What do we got going on with yields? Yields continuing to rise. What are we going to see? Dollar strength. There you go, man. It's all happening. Stay tuned, folks. One more segment. We're coming back. Don't go away. This market's moving. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of Basil's educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps right now down 22 points. Look at this drop off, man. 52.11 from 52.53 in the pre-market, and it's a one-way slide. We got red across the board. NASDAQ 100 off about 93. You get the Dow off 126. Check out like some of the. We talked about MicroStrategy, right? They're doing even more when it comes to Bitcoin, down 9%. Hoo-wee. Coinbase this morning down 6.5%. Yeah, even companies like Apple. Oh, look at Apple, man. Apple holding on to gains. Amazon shares flat. Not bad on the negative market day. Even jumped around. A company like Disney taking it on the chin, man. Down 2% for Disney at 110.20. You talk about a market, man. Stay nimble, stay quick on today because this is quite some action. 25 minutes into the trading day. And speaking of action, folks, our man Basil Chapman, you heard the ad earlier in the hour. Basil comes up next with the Tiger Technicians Hour. And yeah, in 5 days, folks, next Tuesday, right before Fed Day, all right, he's got a live webinar for opening call subscribers. You can get into this webinar, folks, okay, with a 30-day money-back guarantee, risk-free. You sign up for the opening call. You get Basil's outstanding daily trading service. Basil puts out updates for subscribers every market day. He usually puts out about a 60-minute video on the weekends, Saturday mornings for subscribers. And he's going to have a 90-minute webinar coming up this Tuesday from 4 till 5:30. Okay, that webinar, the technical tools needed for the coming few months. Very pertinent. Basil is excited. I was talking to him a couple of days ago when we were launching this. The critical 914 moving average crossover he'll be talking about. The Chapman wave buy mode, okay? He was talking about these round numbers, man, and they are everywhere. Deciphering the rare flood of round numbers unfolding in this market. Sector rotation. Stock selection, live question and answer. Folks, check it out. If you've never signed up for the opening call, even if you have, you're thinking about resubscribing, check out the opening call newsletter. You get Basil's outstanding newsletter. You get his 90-minute webinar coming up next Tuesday, and it comes with a 30-day money-back guarantee. You can't go wrong, folks. Our man Basil Chapman, and of course, he's coming up next with the Tiger Technicians Hour on a day where we got action in this market, folks. Thanks so much for kicking your trading day off right here with me on the Morning Market Kickoff at TFNN. I look forward to talking to you tomorrow, folks, and stay tuned. Basil's coming up right now, and don't forget, check out the opening call right under the newsletter tab on the front page at TFNN. Have a great one, folks. We'll see you tomorrow.